Right, thank you, Tim. Welcome to this Fireside Chat with Randy Smallwood, where we will be having a discussion around the topic of what is sustainable finance. Some of the themes we'll visit are how are banks, investors, financiers adapting to expectations, which is, I guess, quite generic for the sector, but also touching on Wheaton Precious Metals' own position of being a hybrid between lender, off-taker, and a long-term partner, and the role of the company in the communities in which it is partnered. I'm Mike Jones. I'm an experienced mine manager, investment banker, corporate executive, and now regional director of Hatch's advisory business in Africa, Europe, and the Middle East. Today, we're in discussion with Randy Smallwood, CEO of Wheaton Precious Metals. Wheaton Precious Metals had its roots in Wheaton River Minerals, which was relaunched way back in 2001, with Frank Giustra and Ian Telfer at the helm. The original asset in Wheaton River at that time wasn't really considered as a marquee asset, but what followed next was a case study on high energy corporate development, as other players, including Gene McBurney and Neil Woodyer, set about making the best gold company in the world. Backed by excellent advisors and supportive shareholders and a bull market, Wheaton River grew quickly through well-timed and well-targeted acquisitions, culminating in a $2.3 billion share swap with Goldcorp back in April 2005, forming what was then the second largest gold company after Barrick when it assumed the Goldcorp name. Wheaton River's executive management, including my guest, were an instrumental part of the team that built Wheaton River Goldcorp into one of the largest and, more importantly, most profitable gold companies in the world. Goldcorp was itself finally swallowed up by Newmont in 2019, forming what is now considered as the world's largest gold company. Along the way, in around 2004, the forerunner, Wheaton Precious Metals, formerly known as Silver Wheaton, was formed primarily to fund the development of Wheaton River's Louismen mining operations, which included the San Dimas mine, an asset which Wheaton was founded on and still holds a stream on to this day, by forward purchasing of the future silver production from that mine, in what was considered then the world's first streaming transaction. The tightening of capital sources after the global financial crisis also provided the company with an opportunity to continue to grow with a novel financing solution for its partners at a time of otherwise limited access to traditional funding routes. And again, through expeditious targeting of investments and opportunities from that small beginning, Wheaton now enjoys revenues of around $1 billion a year from its streams of gold, silver, palladium, and cobalt. Randy Smallwood has been a part of the story of both legs of its history from the beginning. Randy, do you want to give a short background to yourself and then we will kick off?
Mike, thank you very much for that very generous description in terms of the history and the background of Wheaton Precious Metals and all the way back to the original Wheaton River. As you might not know, I'm a geological engineer, and I started as an exploration geologist with the original Wheaton River Minerals, which predates even Mr. Telfer and Giustra back in the early or mid 1990s. And so, was fortunate enough as an exploration geologist to uncover a couple of good gold deposits through the course of the 90s that generated, I say, the grub stake, the small quantity of capital that brought in Ian Telfer and Frank Giustra and Neil Woodyer and Gene McBurney and the entire group that took Wheaton River and took it to the next stage. And so I've been very blessed, very fortunate to be a part of this incredible growth, this incredible creation of value all over the course. And started off, as I said, as an exploration geologist, became project manager, ultimately mine manager, and then looked at project evaluations. And so led project evaluations from that original Louismen acquisition that we completed in 2001 that sort of really kickstarted the original Wheaton River Minerals, to 2004 when we created the first streaming company, the first streaming project at San Dimas. We created Silver Wheaton mainly because we, at what was turning into Goldcorp, needed capital to continue growing our company, and we recognized that we had a bunch of non-core byproduct silver production in the original Goldcorp, or what was to be Goldcorp, that wasn't getting true value within this gold company, and so we created ultimately well over $4 billion in value for what ultimately became Goldcorp, and I think at one point was the largest gold company in the world, definitely by market capitalization it was. And so So yeah, 2007, I swung over and have been focused on what was then Silver Wheaton and now Wheaton Precious Metals on a full-time basis since 2007, and growing it into just an incredible business that provides support to a very broad spectrum of the mining industry.
Very good. Thanks very much, Randy. I suppose we better get into the meat of the discussion then and start picking up on the themes of sustainability and how Wheaton is handling that particular mandate. So first up, just to put a big background on this, what is precious metal streaming? And why does it appeal to mine operators as an alternative form of financing?
Look, streaming is a contractual agreement between an operator and a streaming company, where the streaming company gets access to a portion of the metal production, you typically non-core byproduct metal production. So, probably the best example is the number of copper mines around the world that all have byproduct gold and silver production, or perhaps lead zinc mines around the world that all have byproduct silver and perhaps a bit of gold production. And so, streaming is a contractual agreement where we, for an upfront payment, which is our capital cost, we commit to getting a certain percentage of the metal that's produced from this mine. And that metal is delivered to us as metal. It is, delivered to us as a company. And then when that metal is delivered to us, we make a production payment on a go-forward basis. It is typically life of mine agreements, which means that we are forming long-term partnerships with our operating partners.
Okay, so how does streaming compare with the traditional Franco-Nevada type royalties then?
Well, I don't know if you can say that anymore, because Franco generates more revenue from streams than they do from royalties. But the traditional royalty, net smelter royalty, net profits interest, etc., typically is just a check that gets delivered on a regular basis, and it's a share of the cash proceeds from any operation or any mining operation. It'll be a 1% or 2% net smelter royalty, which means whatever comes from the smelter, a check will get cut towards the royalty holder. And it's really just a cash transaction. I would describe it as a very passive business. In fact, that's an important difference, because with a streaming company, of course, it's a contractual partnership, it's a contractual relationship, and we have metal, physical metal delivered to us, or metal in kind delivered to us. And so the biggest difference, of course, is that streaming is very actively managed, and that it's a good, strong partnership between two parties going forward. But the fact that it's actively managed gives it certain taxation advantages, and it allows the taxes to be left with the operator in the country where the metal is being mined. It's much more tax efficient. It's one of the larger appeals. But there's another real benefit that I truly believe in the long run makes the biggest difference, is the fact that it is a partnership between two entities. And that partnership, we have an overlying mantra here at Wheaton, where the stronger our partners are, the stronger we are. And so we're constantly looking for ways to improve our relationships, to help our partners be stronger, to move things forward. It truly is a partnership. I find my own personal experience with royalties is it tends to be a very, very abstract and not, I would never describe royalty relationships as partnerships. But streaming is a partnership, and it's a number of entities that are coming together to try and make the best they can out of a mine going forward.
Well, that's all very good, Randy, and I think it points out points to the next question, really. In terms of partnerships, life of mine partnerships, they're based on huge longevity, and that longevity requires a social license to operate. And that then leads into the discussion here when we're talking about sustainability. So what does operating sustainably mean to Wheaton?
That's a perfect segue into this. And you mentioned it, social license. Social license has been around forever. Responsible, successful companies have only achieved that success because they've always recognized the importance of strong social license. It's now getting frameworked and described so much better in today's world in terms of sustainability and governance and such. And so from a Wheaton perspective, we have captured that right from the start. It's been part of my DNA since I started in this industry, and I can tell you that the mentors that taught me everything that I've learned it was part of their DNA. But we are getting much more structured about how we factor things going forward and how we measure sustainable benefits and such. At Wheaton, we really focus on several areas. Again, because these are life of mine agreements, due diligence is incredibly important to us. We want to make sure that we're investing into assets that have the capacity to deliver strong, sustainable benefits to all stakeholders. That's not just shareholders. We don't just work for our shareholders. We work for society as a whole. Our operators work for society as a whole. So there's many other stakeholders in these assets, in these operations. So due diligence, of course, is very, very important for us to make sure that we are making the right decisions, that we are testing to ensure that the assets are going to have the strength to support all stakeholders through the entire mining process. Community reinvestment programs, making sure that we are delivering benefits and that our partners are delivering benefits back into the communities that are impacted by our activities, but also provide support to those areas. Strong governance, making sure that we do establish some good protocols and policies and procedures within our own decision-making process, but all the way up to the board level. And in fact, beyond that, I'm chair of the World Gold Council right now, and the responsible gold mining principles that we've established, continually strengthening those and moving those forward, all sort of come back into the governance, and the gold industry as a whole is, and all the members of the World Gold Council have all committed towards, some pretty high standards in terms of making sure that we've got good governance in place. And then, of course, external voluntary commitments, the materials, the effort that we put into, and again, making sure that there's good, strong, sustainable benefits being delivered. We're the first of the streaming/royalty companies to start reinvesting into the communities, even though we don't operate these mines. We co-fund with our partners to expand their capacity to, again, deliver and expand the sustainable benefits that the local communities are getting. And so making sure that we have all those four pillars checked off is a really important part of ensuring that we were delivering the maximum sustainable benefits to all of our stakeholders.
Well, yeah, I think we'll get to the community investment stuff a little bit later, but first I'm interested in understanding practically how you integrate the environmental and social governance aspects into a due diligence process. And does it particularly affect the speed and manner of that evaluation?
Well, it's, again, when we invest into assets, it's life of mine. And so because of that, we can't turn around and sell the shares or sell this investment. These are long-term partnerships, they're life of mine investments. And so, I again highlight the importance of strong due diligence. We have a separate member on our due diligence team that now focuses on measuring all sorts of aspects, from meeting with the community leaders in the area, measuring environmental performance to ensure that, good, strong compliance, testing, the community reinvestment programs, and we at Wheaton have a very unique opportunity in the sense that we and our teams see a lot of different operations around the world. And so we get to see a lot of, I'm going to say there's things that can be improved in this industry, and we get to see some of those things, some worst practices, but we also get to see best practices. And so as a streaming company, we have an incredible opportunity in terms of sharing that wealth of knowledge, in terms of helping our partners be better. And so I really do look at when we're looking at a due diligence process, we don't just shy away if there's a problem on the sustainability side or on the ESG side with respect to a potential asset. If we see a core value there, but there's things that can be done better, we're not scared of being a change agent, of structuring our agreements so that we can promote improved performance from our partners and help them be better. Again, going back to one of the overlying mantras that we have here at Wheaton: the stronger our partners are, the stronger we are. And so the fact that we have such a breadth of experience and knowledge from the number of different assets that we see, and trust me, we've got just over 30 assets in our portfolio, but we look at well over 30 to 50 assets per year in terms of new opportunities, and we learn from each one of those opportunities. And so it does allow us to get close to best in class in terms of what we expect and what we can share. And again, it comes back to really sort of helping our partners move forward, and structuring our agreements so that there's good, strong support, not only from the operators in these in operations, but also from Wheaton on a go forward basis.
So I'm sure that on the way into an investment, it's not just a tick box exercise. Been there, done that, checked it, and you maintain a focus on sustainability post investment, which you have to do for the rest of the life of the mine. Do you want to tell us a little bit more detail about how you managed to achieve that for your investee companies?
Yeah, well, as I mentioned a little bit earlier on, we were the first of the streaming / royalty companies to actually initiate investing back in. And again, I come from an operating background, as I described in the preamble here, and so I understand how important social license is. And so as a streaming company, and obviously we created the original Silver Wheaton back in 2004. I joined full-time in 2007, took over as the CEO in 2011. And shortly thereafter, we kickstarted our first community reinvestment programs, where we set aside a certain amount of our net income is dedicated towards programs that are benefiting the communities around, first off, our employees, but also around the communities that surround the mines that deliver us our materials going forward. And so we were the first of the streaming / royalties to kick this off, and it's something that's grown substantially, and I'm incredibly proud of our approach here and in the success it's had, because I know it has developed strong partnerships with our existing partners, and in fact, represents new opportunities for us on a go forward basis. All of that. All falls behind the fact that it's just the right thing to do. And that is to do everything we can to make sure that we deliver good, strong, sustainable benefits. We help our partners maintain good, strong social license. So currently 1.5% of our net income is set aside and reinvested back into community reinvestment programs and all sorts of initiatives on those fronts. 2/3 of that is actually focused on the communities around the mine site. So our partner, the communities around the mines that actually deliver us metal. So even though we don't operate that, and what we have is a team that constantly works with the sustainability and the initiatives of our partners to match and to co-fund programs going forward. The Vale Foundation down in Brazil, we've had great success on a number of different fronts with health facilities, with economic initiatives, and all sorts of other things. Education focus. We do have several pillars: environment, education, health, and of course the community, economic development and sustainable benefits, making sure that we leave those sustainable benefits in these communities. And so these programs, proud of what we've been able to accomplish. In fact, last year when the pandemic first hit through 2020, we could see, one of the challenges that we saw around the world was that a lot of our mines are located in remote and rural jurisdictions, and they weren't getting the same level of attention and support that some of the urban centers were in terms of trying to manage the way through the pandemic. And we were seeing, perhaps greater impacts in some of these locations. And so we kickstarted a $5 million fund in addition to our regular CSR programming, an additional $5 million fund to provide support related to the pandemic, frontline support in terms of making sure that materials and supplies were available for those that were trying to manage the risk associated with the pandemic. And so it all really comes back to just making sure you're doing, and it should be simple, doing the right thing, making sure that we recognize the fact that we've had good fortune, and in times of challenge, stepping up and making sure that we deliver and share some of that good fortune with some that have been more impacted from that. And all of that wraps into an overall package of making sure that we, again, build stronger communities around our mine sites. The industry as a whole needs to do this. We do it here at Wheaton. We do it at the World Gold Council. It's something that is just the right thing to do.
So yeah, so community support is obviously fantastic in your organization, but back to the theme of this, sustainability is more than just corporate social responsibility, of course. You recently listed on the standard list of the London Stock Exchange. Not necessarily immediately relevant, but possibly in the future, is the requirement for premium listed companies to report in line with the Task Force on Climate-Related Financial Disclosures, TCFD, so to speak. This reporting is already in place in your corporate metrics, but doesn't, as far as I'm aware, extend across the investee portfolio. Are you intending to look at emissions on a portfolio basis rather than a corporate basis, perhaps? And how do you see your role and responsibility in helping your partners to strike the best practice in this regard?
Well, it's interesting because our 2020 sustainability report was our first time reporting in alignment with the TCFDs, and we are committed to moving that forward. And I'm also pleased to say that well, by the time this gets published, the World Gold Council members will all have committed towards reporting with in alignment with the TCFDs, and so soon to be announced. But it is definitely a step forward on our journey of continuous improvement, the industry's journey of continuous improvement. In 2021 here during this year, we are working with E&Y to conduct a Scope 3 screening exercise just to see if how we could expand reporting categories so that we could include Scope 3 emissions. But it is a little bit challenging, mainly because we've got a number of different peers and a number of different jurisdictions, and we haven't seen guidance as to how we could actually capture or bracket Wheaton's share of emissions from our mining partners. And so it is something that we're working on and trying to move forward. We are definitely moving down this path. We are also conducting a scenario analysis in this year here that's going to focus on 6 different regions where our most material assets are located, and we should be having a look at how that. Stay tuned. We think that'll be included in our 2021 sustainability report to be released next year. Some of the results of that, and so it is definitely a journey that we're moving down. There has to be. We're still trying to define the framework as to how we could capture, some of that Scope 3 to sort of establish that on a go-forward basis and report that.
One of the things that we at Hatch have noticed is a trend towards electromobility, and as miners are increasingly looking to further reduce greenhouse gas emissions beyond the current targets, many are looking towards electromobility for their fleets in the long term, be it hydrogen or fuel cells or whatever. Is there a scenario where Wheaton could take a leading role, perhaps in financing maybe some retrofits in existing mines, or finance that infrastructure for new facilities?
Well, there's several different ways that we could do that. And first off, net zero is and it should be a goal for everyone on the planet. Period. We have to try and find a way to minimize the effect of our presence here in terms of what we're doing. And so net zero goals are incredibly important to the industry. I think to all industries, they should be incredibly important. So there are many ways that we can help going forward. First off, in terms of funding and financing that, the initiatives like that during the initial streaming agreement, we'd be happy to co-fund and move that going forward as part of our initial upfront payment. The capital that's required, definitely would be treating that with a higher level of I should say a lower cost of capital, just because of the end goals that you achieve through moving forward on something like that. The other side of it, though, is also from our community reinvestment and our sustainability initiatives. Environment is one of the pillars that we do focus on, and it's pretty easy to look at this as being supported from that. And so all sorts of capacity for Wheaton to step forward and work with our partners in terms of delivering support on that front, both from the upfront payment and from the community reinvestment programs that we have in place. The sustainability initiatives, trying to lower those impacts and trying to go electric. It's just all sorts of opportunity there.
So back onto the personal angle as well then. In the social domain, how do you ensure that human rights risks are identified and mitigated, and that human rights are protected by your third-party investees?
It's a constant objective. As I mentioned earlier on, we have a focused ESG specialist who meets with community representatives to try and measure the benefits and the challenges that communities have with these mines. We look for opportunities as we're going through that due diligence process to ensure that you know, if there are challenges, are there ways that we can help guide to improve safety performance, environmental performance, social performance? Are there ways that we can, again, be a change agent to actually deliver and help guide our partners? I mean, the mining industry is a bit of a unique industry in that you know, once mines are up running, we tend to be pretty traditional and pretty I'm not going to say closed shop, but we just don't have you know, a lot of access. And as a streaming company, we do have an incredible opportunity again to share that experience and that knowledge of what we've seen and what works around the world, and again try and help everyone move forward. So you know, so during the due diligence, very, very important, but even post that, in all of our agreements, we have the right to visit all of our assets on a regular basis, typically once a year. A little bit more challenging in a pandemic world, but we do stay very, very connected with our partners, with our mine sites, to ensure that at the very least we have a good, strong performance. We do have a partner code of ethics that we incorporate into our we've started incorporating into our contracts over the last few years, and it has some defined parameters with respect to human rights and so on. And so we've got lots of opportunity to see this and to monitor. You know, a lot of times it really does come down to making sure that we've got good operating partners with good operating assets. And you know, that's really, you know, again, I think 80% of the work is at the due diligence stage in terms of making sure that you know, that framework is there that you can build from.
And finally, with your World Gold Council hat on, how would you comment on the importance of environmental and social governance in the mining industry as a whole?
Well, you know, the mining industry is very unique in the sense that we've got an incredible opportunity to deliver and to dramatically improve the standard of living in rural locations. Most of our deposits, most of the mines, we can't pick them up and move them. So we have to go to these remote locations. And quite often, those remote locations are where some of the poorest standard of living, the poorest communities are around the world. And the dramatic change that can happen, the dramatic impact that can happen. And so it's we as an industry, as part of a society, have to make sure that we capitalize on this opportunity to make sure that we do deliver sustainable benefits, that we do improve the standard of living, and from so many different aspects all the way through it. So you know, it's why at the World Gold Council we did bring in the responsible gold mining principles, and it's been embraced. Not only, I mean, we're particularly proud to say, obviously we've got our 30, I think we're 33 or 34 members of the World Gold Council, but even companies that aren't members of the World Gold Council have publicly now committed to maintaining the standards of the responsible gold mining principles. And so, you know, the combination of that and the UN Global Compact initiatives around the world, you know, what we've really pushed for is that we see these kind of standards pushed forward to, again, recognize that we as an industry have an incredible opportunity to deliver good, strong benefits in rural locations, and you know, strengthen these areas where you can actually build up that. And it's just it's an opportunity that we shouldn't waste, and we're not wasting. You know, the push forward down that path is something that we really do have to continue pushing. You know, it's not just the gold industry, it's the entire mining industry, entire resource industry. We just have to continue to make sure that we do the best we can for the communities that are most impacted that we can, but also step back and look at it on a global basis. There is only one planet, so.
So look, I mean, I think you're absolutely right. The global mining industry is almost unique, perhaps, in being that industry that has the ability in certain areas to double the GDP of a country and, you know, positively affect people's lives and take them out of the poverty belt that they're in. But we've reached the end of our time, I think. So I'd like to say thank you very, very much indeed, Randy, for that enlightening discussion on sustainability and how Wheaton is doing its bit. Thank you very much indeed. That was a pleasure.
Mike, I appreciate the opportunity and thank you.